Everybody wants ambient lighting so much that they literally put it into freaking Nissan Altimas, for God's sakes. Look at that. Okay, so this is what happens when the Hellcat police pull up on you. Now, it shows a Hellcat thing. It says Daytona on it, right? It says Hellcat, right? That's a picture of a Hellcat. But this is clearly not a Hellcat. I'm sorry, sir. That's stolen glory right there. You're going to get in a lot of trouble for that. So just for reference, this is what a Hellcat Daytona is supposed to look like. So as you can see, there's actually a Hellcat on the Daytona. And it actually says Daytona, and it actually says Hellcat. That's what it's supposed to look like, my friend. You're not allowed to steal valor. We're going to surely punish you for it. And this, just in case you're wondering, is $77,000. They dropped the price about $3,000 from $80,000, and it's $77,000 on the website. It says that Ram TRX, this big, gigantic ass truck. Look at this thing. It's like, that's what a truck's supposed to be right there. That thing is just fucking gigantic. That's a big ass truck. That is a big ass truck. I know it's hard for you to see it, but look at that. This guy got a Honda Accord and somebody stole the goddamn wheels off this dude's car. So here you are in the morning waking up. This poor woman woke up and is trying to drive her child to work. Somebody stole goddamn fucking wheels off her car. You know, that is just a shame. It's absolutely a shame. That is just horrible. Okay, so basically, I'm not going to make this too long, but the Dow blew through 37,000 just a day or two ago. And the catalyst was Jerome Powell claiming that there weren't going to be any more raise increases this year. At this point, I really don't think it would make a difference anyway, because for the most part, houses are completely unaffordable unless you're rich or you're fixed income retiree. Cars are a complete disaster right now. The dealerships are either trying to rip people off by raising the prices of the vehicles themselves with market adjustments, or chances are the vehicle that you want you probably can't get because either it's unavailable or it's unavailable with the equipment you want, or the cost to buy it is way too high. And if that's not enough, the deal killer is usually the insurance. The insurance costs are too high. But we're just talking about the market real quick. And I have to point out that just about every prediction that I have made has pretty much come true. So first of all, the Dow's at 37,000. Gold hasn't really moved upwards much more, but it looks like it's starting to hit a $2,000 floor. I personally think gold is a terrible investment per se. Most people use gold as an inflation hedge, but the reality is it just sits there with your money and it doesn't really do anything. It doesn't produce a dividend. Now, there are some ETFs behind gold that do produce dividends, so that's a little bit different. But for the most part, gold, you can put as much money into it as you want. But for the most part, the stock market had outperformed gold. S&P 500 outperformed gold. If you had put your money into most of the better stocks of the S&P 500, 20, 30 years ago, it would be worth thousands of times more than gold. And, that's easy to demonstrate when you just look at the stocks making up the S&P 500. So anyway, Microsoft is down just a little. I'm looking at the 10-year span, but I could change it to the 1 year the 1 year span is good. Or I'll change it to year to date. So for the most part, Microsoft is doing pretty well. And I'm a huge believer in Microsoft. They have Windows 12 coming out next year. Microsoft is definitely doing very well. Xbox should be doing better, but I don't think they've fully figured out what they want to do with it yet. However, because Microsoft owns so many IPs, it's like Microsoft, I have no worries about them, and Microsoft pays a dividend. NVIDIA pays a dividend as well. NVIDIA, as you know, has been the catalyst to move the entire market upwards through AI technology. Their RTX ray tracing, their DLSS, all of their technology is making headlines almost every single other week. So the money that I've invested into NVIDIA, I'm just letting it sit. I'm letting it ride. Apple right now is at pretty much all-time highs. It's at $198.11. I know Apple is going to continue to move upwards, but I think what the real problem is, people they keep claiming that Apple's not innovative, but you got to think about the fact that right now Apple is trying to transition from China to India. So I'm not surprised that since at least the iPhone 11, that there hasn't been much in the way of design innovation. Now, I really don't think Apple's going to make a folding phone anytime soon because a folding phone is stupid. First of all, the display is inferior quality on these folding phones. And for the most part, the iPhone, for what it is perfect. And I think that kind of works against the iPhone because basically, no matter what iPhone you have, if you have like an iPhone 11, 12, 13, or even a 14 or 15, for the most part, you don't really need to upgrade because these phones are basically perfect. They're waterproof, the cameras are perfect, so forth and so on. It's like the internet is basically stuck at 4K video. The cameras in all of those phones from 11 to 15 is 4K. So besides, claiming that they have better battery life or changing minor features on it, it's like the phone is relatively perfect. So I have a 10s Max in one of my drawers, and I was going to gift it to somebody who wanted a slightly bigger phone, and I don't need it. And the thing about it is that 10s Max has really good features. It has 4K camera. It pretty much has a big screen and everything. It's like it's so perfect until for the most part, it's like they can get by with it and they don't need to upgrade to a 14 or a 15. So again, I think after Apple moves to India, I think maybe that's when you'll see real innovation. But for right now, I think that they're just holding back on it. Google and Amazon. Right now, Google's $133. Amazon's $147. I was telling you to buy these things during the split. I was able to secure over 100 shares of Google and over 100 shares of Amazon. And I was able to do it before the prices started rising pre-split. So between Google, Amazon, NVIDIA, Apple, and Tesla, my post-split shares are doing very good. Tesla's right now at $251. I have no doubt that over the next year, Tesla's going to go up and probably pass $300. Now, one of the articles that I was looking at was claiming that it's possible Tesla could go past 500. Now, we've already seen Tesla do that before because before they had the splits, Tesla had thrown through 1,000. So because Tesla's opening up their network, the supercharger network, to all of these other EV chargers, these other vehicles like the EQS, Mercedes products, and the BMW products, it's very, very likely that Tesla is going to be doing very well in 2024. AMD, look at AMD. It's $138. Now, anybody who's watched me long enough knows that I've been telling you about AMD, Logitech, and Micron. I was telling you about these things when they were $50, and I've said it in every single video I've made. That's why I don't delete any of my videos. You can go back, and I was pushing all of these damn things back when they were below $50. Right now, had you listened to me, that money that you put into AMD under $50 right now, you'd have $138. So you basically more than doubled your money. Now, if you had listened to me way back when I originally was pushing it, you'd probably have tripled your money at this point. Intel. I was telling you about Intel when it was $33. I was saying, yeah, like I believe in Intel because, that's the only type of desktop processor that I buy. I usually don't buy AMD processors for CPUs. But Intel's at $45 now, so they've gone up $10 since I started hawking them, at least. Micron is $82. I was telling you about Micron well before $60. In fact, well before $50, depending upon when you look. In Micron's news, they're talking about how Micron is the government is throwing a lot of money towards it because they want to make it a world-class chip competitor. They are building a factory in Troy, New York. So hopefully we remove her in the next election because I can't stand her. But anyway, it says Micron is going to be joined by New York in $10 billion chip research factory. So basically, I'll just say it like this. You have to pay attention to what the government is pushing forward because there is still, no matter how you slice it, we're basically in a Cold War between us, China, and Russia. And in this case, it's a tech war. America's trying to force NVIDIA to refuse to give China AI technology. I don't think that's going to work out too well. I'm pretty sure China is going to invest in their own AI technology, and whatever they can't build themselves, they're going to use spies to make sure that they steal it. So it's not going to work out well. I'm pretty sure in the long term that's not going to work out well. The smarter thing to do is to stop trying to sanction these people and just let them do their job. Because China, I have to give them credit. They have built so much of our technology for such low prices. They have allowed us to live a quality of life that our own productivity doesn't justify. I can walk into Walmart right now. I can buy a 70-inch television for $500. That's like unheard of in the past. In the past, a 50-inch television cost you thousands of dollars. China is shitting out televisions, and they are shitting out cell phones, and America is just trying to make it harder. And I'm like, why are we trying to make it harder? I guess these communists, these Democrat communists and socialists, I don't think they believe in free market trade. I don't think they believe in it. I really don't. And they prove it every single time they slap a sanction on somebody, and then they end up hurting the American people's pockets because the prices go higher on everything that we're buying on a regular basis. I don't think these communists believe in the free market. I really don't. TSM passed $100. It was like $99 within the last 2 weeks, so it's at $103. Roku is also worth investing in. They put their technology in just about every television at Walmart and like Best Buy. And Roku, the systems that they operate, Roku's been doing pretty well. And then after that, you have these auto companies. Now, Stellantis, from what I've heard, Stellantis is the most profitable of the automotive companies. They're more profitable than Ford, more profitable than GM. Now, Tesla is more profitable than all of them because Tesla operates with less debt. They have no dealerships, and they just have galleries, and they have their own way of doing things. So Stellantis, which, you know, they're still suffering the UAW strike, and I still haven't gotten my Jeep back. For the most part, Stellantis, I'm going to continue to hold the shares that I've bought in Stellantis, especially since they pay a 6.46% dividend. As we're entering the new year, my dividends are about to reset, and I'm going to start collecting dividends again, starting in January and working my way through the year. And that's ultimately what you want to do. You want to build a portfolio that continues to pay you from the dividend stocks that you hold. One of the speculative assets that doesn't pay you dividends is crypto. Bitcoin is around 43, Litecoin is around 72, Ethereum's around 2,311. Now, there are some people who are, oh yeah, well, why aren't you talking about the rally? It's like, listen, I don't even recognize the Bitcoin rally until they give back all that money that they stole from all those people who bought in above $60,000. So until it gets to 68, I don't care. Until Ethereum is back to 4,000, I don't care. Because there's a lot of people who lost a lot of money betting on this bullshit, thinking it was going to $100,000. So yeah, it's easy to talk about it going up, but what did it go up to? You've still lost more than 45% of your value since you were at 68,000. So I'm not even going to waste time talking about that. I'm going to keep on moving. My Berkshire B shares are doing fine. They're up. Meta, I didn't personally invest in because I refused to give that bastard Zuckerberg a dime. I have family members who bought Facebook. I'm not one of them. And it is what it is. Now, yeah, you could have bought Facebook at under $100 and you would have doubled or tripled your money at this point. But nah, it's like I have other ways of tripling my money. Facebook is somebody I don't need. Schmuckerberg ain't getting my money. It's just that simple. I wouldn't buy shit from him on principle. After that, you may notice that the electric vehicle manufacturers, their shares have started rising. Rivian, for example, is at $22. Lucid 514, it's up like from 4 something. Fisker's at 155. I have no idea about the longevity of Fisker, but the thing about it is I own the stock just in case they get big. And when you're talking about the stock is $1.55, and I was able to basically buy 1,000 shares of it, it's like, I'm just going to hold it, because the thing about it is even if it continues to go up just to $3 or $4, I still win. So it's like there's no loss there. That's assuming I tried to sell it, which I'm not. My electric vehicle stocks in general, I'm going to hold those for at least 10 years. Basically, I'm not selling anything until I get to retirement. I'm going to sit back, collect dividends, and I'm going to keep on reinvesting the dividends to buy more stock. But I'm not selling anything. I'm not selling any of this. I've never been the type of person to sell anything. Maybe you could call it stingy, but you remember back in the days when people, they had Nintendo and they had Funco Land and people would be selling their games and trading their games. I never did any of that because as far as I was concerned, it was just better to hold. It's like, I don't care if it goes to zero. I'd rather just hold it. And it's not going to zero because there's too much money in these things. There's too much investment. Who else? GE, BABA is low. You can't invest in China right now. So most of the Chinese companies, you can't really do anything right now because America is still with these sanctions and everything. I think if we get Biden out of office, which is, it looks like that's coming because they're impeaching Hunter and they're basically impeaching Biden through Hunter, I should say. Once Biden's out of office, if we have a pro-capitalist president, chances are we'll end this ridiculousness that we've got going with China and we'll be able to watch these stocks rise again. Then there's, who else? The airlines are all, for the most part, down. JetBlue is half what it was. But JetBlue, I noticed, rises pretty quick. Like, it gets up to about $10. So it's like right now it's $5.73. So if you buy shares in that, chances are within the next 2 years, you'll be able to sell and double your money. Delta is one of the safer ones. Delta, American Airlines, and United Airlines, those are some of the safer ones to invest in for long term. During COVID, we basically saw that. Their values went up rapidly. Unfortunately, they went down again as we entered recession. But the thing about it is, they're not profitable and they won't be profitable for some time, but they're worth holding on to if you want to short the stocks. Oil stock, as you can see, oil is oil actually dipped a little bit. My two favorite dividend payers are SM and SLCA. And as you can see, oil is actually a bit down. The high that it hit when Russia first invaded the Ukraine. That sent all of the oil stocks sky high, at which point I sold huge chunks of my oil shares. And right now I'm sitting on $100,000 in cash, which I'm waiting for my electric car. But apparently GM doesn't want to just hand over my car. I don't know what it is. They say that there's a problem with the auto cruise system and that shit ran over some woman and dragged her ass. That's what they say. Bottom line is I don't care about any of that. I just want my car and that's it. So who else? If you're looking for dividends, the banks are probably the safest thing that you can put your money in for dividends. These banks aren't going anywhere. JP Morgan, Chase, Citigroup, Capital One, Wells Fargo, Bank of America, Goldman Sachs. I should also include American Express, MasterCard, and Visa to this list. I have them a little bit further down here because there's only so much space you can hold. But if you're looking for dividend stocks, the bank stocks, the oil stocks, and the gas stocks, those are pretty much the best ones you can buy. They all pay dividends for the most part. And the longer you hold them, the more of your own money comes back to you in the form of dividend repayments that you can use to buy more dividend stock. And that's the goal. The goal is that you want to build a portfolio based on dividends that's large enough to return enough of your money to you annually that you can actually take that money and you can buy more stock. You don't take that money out and use it and waste it. You take that money and you buy more stock. That's what the goal is. Eventually, you will have an income from that portfolio so large that you can basically buy anything you want. If you want to put money in freaking crypto or gold or something, yeah, you can do it. But now the money was generated by money. That's the key. I would have never been able to start these portfolios in the way that I started them if it wasn't for my idea to take YouTube money, the YouTube revenue, and invest it into the stock market. Like most people take YouTube revenue and they were just buying cars and leasing cars and renting cars and stuff and trying to show off. All of those channels are dead now. That's basically what it is. All those channels are dead. At this point, the car market is so expensive that they can't afford to buy anything. Meanwhile, I was taking the money and I was just pouring it into the stock market, and I was buying specifically dividend paying stocks. So at the end of the day, I won. Let's see. Logitech. I was telling you about Logitech back when it was only $50 a share. Now, Logitech had risen very, very high, and then it dipped down a little bit when we entered recession after the Russia-Ukraine entry war. But now they're back at $94.98. So, again, that was one of my better predictions. Who else? Anybody else? Yeah, I guess the only other things here worth talking about are the credit cards, Visa, MasterCard, American Express. MasterCard was less than $400, and I think that was like just 2 weeks ago. Visa, MasterCard, American Express, as you can see, it's nothing but up. That's Visa right there. That's MasterCard right there. That's American Express right there. As long as Americans are using credit cards to supplement the income they don't have, these things are nothing but profit. Because when you really think about it, credit cards and credit, they don't really exist. What you're doing is you're allowing people to defer payments, and then you're taking, with interest, their real hard-earned money from them. It's the most profitable possible commodity in the world, credit. And that's why America is so damn deep in debt. That's why they're $34 trillion in debt, because unlike me, see, if I was running America, you could bet that there's no way in hell we'd be this deep in debt. All of those countries that are waiting for America to hand them money, Ukraine, Israel, I'd be telling them, no, I'm sorry, we can't afford it. Click, goodbye. Hang up the fucking phone. And that's it. If I was running the country, oh yeah, you could bet we'd be in the green. I'd hang the fuck up on you. And that's just how I'd do it. And I mean that. So all of this foreign aid and all of this nonsense that we were starting wars and shit in other people's countries, it's like, no, we wouldn't be doing any of that. Lockheed Martin, yeah, I'm not paying you $100 million per jet. I'm not paying you billions of dollars per plane. You're going to have to make it more cost effective. And if you don't, then you can forget it. I'll go over to Boeing. And if Boeing can't do it, then I'll get it from Northrop Grumman or somebody else who can meet my prices. I'm not going to pay you money to buy shit that we can't use. It's like, what, are you kidding? But that's the reason why you're $34 trillion in debt, because they don't think like me. They're busy pilfering America. They're busy stealing from America. In the good old days, these people would be hanged. That's just what they would do. They'd be hanged. But we don't do it like that anymore because we're sophisticated. See, in China, when you get caught embezzling money and glad hatting and everything, they literally execute you. They really do. But we're sophisticated. We're gentlemen over here. We don't do stuff like that. We just go deeper and deeper into debt until we go bankrupt. That's how they handle it. So yeah, it is what it is. Netflix is doing really, really well. I'm amazed that people are so addicted to Netflix that they can't give this shit up. But yeah, my Netflix is doing well. Anything else? Yeah, my Home Depot, my Lowe's, all of these things are doing well. And ultimately, that's because the Dow is at 37,000. So for the most part, we're at record highs on the Dows. I think we're going to go even higher. Now, when they get these pathetic Democrats out of office, these socialists, once they get them out of office, I think pro-business attitudes are going to let the stock market go. We could hit 40,000 within the next 4 years. I'll give it 4 years because, that's a presidency that starts next year and it, extends, for 4 years. I think we could hit Dow 40,000. So the bottom line is, over the next 4 years, you have to decide, what are you doing with your money? Are you just leaving it in the bank and it's collecting not very much interest? Are you investing in things that you have no idea if they're growth or value stocks? Are you investing in dividend paying stocks? Or are you buying Dogecoin? You have to basically decide what you're doing with your money. I've already decided. My focus is dividend paying stocks, tech sector, banks, and oil. For the short term, oil and energy stocks are still the big thing. It just is what it is. The electric vehicle market, I keep reading these stories where they keep saying the EV demand is not there. I think that's a bunch of bullshit. I've got $100,000 in cash waiting to buy my electric vehicle, and I can't even get it because they won't give it to me. There's a demand. What's not being met is the demand. The supply, supposedly, I have a VIN number, and I was able to even print out the sticker for my car. My car is sitting in Tennessee right now. Now, supposedly, they're doing recalls on the software or whatever it is. I don't know what the fuck it is. But I have the money, and I want the car. Why can't you give me the car? I don't understand. No, I had my electric fuse box charger installed. I've got a charger sitting on the side of my house right now, ready for the car. But there's no car. Where's my fucking car? It's really, really frustrating. I think the demand is there. For instance, they just showed the EV Blazer, and they also showed the new Cadillac, the XT6 electric competitor. Yeah, there's a demand for this stuff, but you keep showing me stuff and not giving it to me. Like, why are you showing me stuff that's like, still being built and not produced yet? Like, don't do that. Show me the stuff that you've produced that you're ready to sell. So this way I can walk into the store, hand you the money, and drive out with the car. I don't understand what the fuck y'all are doing. I don't get it. But, it's really, 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 really frustrating. It really, really is. Yeah, I'm looking at GM right now. This is it right here. The Tesla luxury rival. Now, first of all, Tesla has the shittiest interiors on the entire market. Tesla's interiors suck so bad until they make Dodge interiors look like you're in a Maybach. But bottom line is, yeah, they got this new Cadillac. What the hell is this thing called? The Vistic or some shit? What is this called? They keep coming up with these crazy ass names. The Vistic, the Vist IQ. So this is it right here. So they got this. This is the new Cadillac. And this is a 3-row. And basically, it's an XT6 that is electric. That's basically what it is, right? Now, my Lyric is basically an XT5 that's electric. And in China, they have the Optic, which is an XT4 that's electric. I don't know if they have a picture of it here. But if you're telling me there's no demand, then why is it that you can't just give me my fucking car? Like, this doesn't compute. This doesn't compute at all. I want my car. And all these people, oh yeah, the Cybertruck's ugly. The Cybertruck's ugly. Yeah, guess what? People have sold out the Cybertruck. As soon as there are people right now who are sitting on cash, and if they could get their Cybertruck tonight, they'd have their Cybertruck tonight. So how are you telling me that the EV demand is low? But see, that's not true. What the reality is that they found out, and I'll show you what I'm talking about in a second, but they found out that a lot of these dealers are purposefully sabotaging EV sales. I'm going to show you that right now. So this isn't the first time that I've seen something like this. I remember way back when the Fisker Karma first was released. Back then, we had a Jaguar XJL portfolio, right? That was back when the XJ first came out, right? The Fisker Karma was being sold in the Jaguar dealership, but for the most part, they had maybe one or two of them, and you're in a posh neighborhood, and nobody really knows anything about it. But the problem was the dealers either didn't understand electric technology back then that well, or they were getting paid more to sell Jaguars. And for the most part, when you'd get in those cars, you could see that the Fisker Karma basically looked just like a Jaguar inside. It was just a whole lot tighter. It was more like the Aston Martin Rapid if you tried to sit in it. But anyway, they're saying dealerships must innovate when selling an electric vehicle. So what this is basically talking about is my Cadillac dealer, they were telling me about how they had to buy brand new lifts and they had to buy brand new forklifts and they had to install chargers around the premises, right? But that costs a lot of money, and a lot of these dealerships don't want to do it. So some of these dealerships were countersuing because they didn't want to upgrade and they didn't want to spend the money. It says the Tesla sales model removes the car dealership from the sales process. And you see, my problem with I have a couple of problems with this Tesla sales model. Like, for instance, you got this Chinese girl right here, and she's telling this guy shit that he already knows about the car. Because first of all, you don't walk into one of these dealerships unless you pretty much know everything you need to know about the car, because we've read all this stuff online. So this is most likely a Tesla dealer in China. But the bottom line is, Tesla doesn't have as much debt as the automakers in general because they don't use dealers. Without the dealer model, Tesla basically gets you the car direct. Like, Tesla is one of those car companies where if they really wanted to, they could sell you cars out of a vending machine just like Carvana. And me just saying that, it sounds ridiculous, but yeah, that's, Carvana. We have a Carvana like a couple of miles away. And it's a big building, and apparently you take like a big coin and you just stick it in there and the car just fucking comes out and you just unwrap it. It's like, it's cool, but it's really weird if you're not used to that kind of model. Tesla has also opened up service centers nearby me. Now, I have no idea where the Rivian service center is. I have no idea where the Lucid service center is. But what I do know is I know where the Tesla ones are, right? So, yeah, Tesla has this model, and it's scaring the shit out of all of these unions because they know that these electric cars mean fewer parts, fewer repairs, and a lot of them are going to lose their jobs. I would say, and I'll say this, if you want to make investments into the future of automotives, you should be buying into tire and wheel companies because, yeah, these electric vehicles have fewer parts, but what they also have is they're tire hungry. They grind tires to dust because they have so much traction and they have so much torque. So tire companies like Goodyear, that's a good thing to invest in because tires are going to be even bigger than they are now because these fucking things go through tires. You have a lot more weight sitting on the tires, and the torque is so high that it wears these tires out like fast. Most EV owners will tell you that, in fact, if they're being truthful. It says many legacy sales professionals do not know how to sell EVs to new customers. Well, I'm not one of them. If I had to, I know how to sell an EV to a customer. And I don't even work in that industry, but I know how to do it because I understand the stuff inside out. Dealerships spread rumors and misconception about driving and charging EVs. So basically, long story short, the dealers have an incentive to sell gas-powered vehicles. So what they've been doing is sabotaging EV sales. And it's a damn shame that they're doing that because the only thing that hurts is the consumer. What they've been doing is marking up the gas cars and sabotaging the EV cars. It's a damn shame, but this is why, this is what it is. The reason why we're stuck with dealerships ultimately is because most people want to know where they can take their vehicle to if something goes wrong. And they're not listening to any huge speeches and shit. They just want to hand it to you and get it fixed. Not only that, they want to be able to know that if they require long-term fixing, that you have a loaner that you're going to give them. Tesla don't do that. And that's one of the biggest problems I have with Tesla. If I buy a Tesla and I take it in for service, I expect you to loan me a Tesla. Like, I don't expect you to loan me no Chevy. I don't expect you to loan me a Ford, like a Sonic or something. I don't want that. But that's just what it is here. The last thing I'm going to say really quickly is there's a lot of AI generated stock articles online. There's a lot of them. Motley Fool is one. I've been watching them for a very long time. And these guys, they use a lot of AI generated information in order to post these. They post like wild assertions in their articles. I've been following them for years. It's funny because they constantly throw together lists of stocks you should buy, and their list looks oddly like mine. Mine is Microsoft, Apple, Nvidia, Google, oil stocks, Amazon, Tesla, and then I added in Micron, AMD, and TSM, and bank stocks, and a couple others. Theirs is exactly like mine. Based on the FANG stock model, where you had Facebook, Apple, Amazon, and Nvidia, and Google, they've changed it, to accommodate Meta. But for the most part, their indexing, the way they talk about indexes, looks exactly like what I've been saying for years. So even they are pushing the exact same investment ideas that I am. So the ones that pay dividends, specifically like Apple, Microsoft, and Nvidia, those are a good cornerstone to have in your portfolio. But then you have the other ones that don't pay dividends, but are, seemingly growth stocks like Tesla and I think Meta pays a dividend though. But I think Tesla, Google, and Amazon, I think at least two of them don't pay dividends. So the whole point is you buy the stock, you wait till it rises, and you sell it. But there's a whole lot of stock information online, and I read as many articles as I can, whether I agree with them or not. But it's so funny that it's gotten to the point where I can pretty much predict what they're going to say before they say it. And, with Motley Fool, this is what they always do. Oh, should you invest $1,000 in a video right now? Yeah, well, if you did it right now, you're getting in really late. You should have been doing it back when they had the split. It's like, it's really funny. This AI technology, this is the reason why I'm investing in AI technology, because AI technology is going to get all these goddamn journalists, these shitty journalists, it's going to fire them all. Because the mere fact that you can ask AI to create articles like this, and AI can pull up all this information down to the minute details of the stock market at the second, because it's going after facts and it's going after data. It's as easy as if you ask your phone to tell you about, how certain stocks are doing, and then the phone replies with an answer. Well, if you just transpose that information into one of these articles, now you've got an article, and that's all they do. These people, they're not really good at prediction, and it's like they're good at, throwing and cobbling information together, but they're really not that good at prediction. So basically, that's all I really had to say. I just felt like making this video ever since the Dow hit 37,000, so I wanted to get this out of the way. And if you have questions, comments, or criticisms or whatever, you can, put those in the URL section.
To be continued.